This is a video on 4 mistakes stock market investors are still making right now in 2023. And I do know that they are making those mistakes from the feedback I get on my videos, from the things I see on Twitter, and just from seeing people in general here on social media. And again, it makes me a little bit sad that investors are still making those same mistakes in 2023. And I would love to actually talk about them in this video. And these are actually my favorite kind of videos to do. And the more I get, subscribers and stuff, the more I can do more tutorial type of videos talking about certain things in the market, and I can do more of the things that I actually, really enjoy. Now, let me start with the first one, and I believe this is actually the most important ones, and it has been happening recently. And this is chase narratives instead of profits. If you remember when this whole thing started with Silicon Valley Bank, many of the people, again, investors and stuff, they started going on YouTube and in other places, watching like bear porn, like videos. This is a GFC 2.0, watching videos like, banks are collapsing, it's the end of the world, 800,000 views, massive bank run just begun, do this or do that. And they spend hours and hours actually watching, who's gonna fall next and which bank is gonna fall next and all that type of stuff. Well, they didn't think of how they can actually profit from this in their own portfolio. How will those things that are they watching, they're actually gonna make them money or actually going to save them money? And the answer is none of them are actually gonna make you money or actually save you money. For example, what I personally did, and I shared it with my video before, as soon as the whole thing started on Thursday with Silicon Valley Bank, I went in my broker and I started looking, and I saw the market was going down. I couldn't touch the market. The dollar was moving. I didn't touch the dollar. So I looked and I found junk bonds, which were still positive. I'm like, all right, if people are right that this whole thing is a GFC 2.0 and all that type of stuff, investors are going to sell those junk bonds. So I bought put options on junk bonds. On Friday, I was up around 41%. I shared that with you guys. On Monday, I was up 74% in 3 days. This is how my mind went. It didn't go, oh, let me watch this video or to see who's going to fall next. I'm like, how can I make money? This is what I care about. I don't care, the bank is going to fail and who's going to fall next. It doesn't matter. And maybe you might think that you're smart and you want to short something like First Republic. And I put this tweet on Twitter, which, it was already priced in the options market. You were paying over 250 to 300% in implied volatility on those puts. So it was already priced in, and the people that bought those puts actually got killed. So you couldn't even short the other banks. So none of those things you actually looked at were able to make you money or save you money, but it was a lot of time wasting on the weekend. What I was doing on my weekend, I was looking for companies to put a price alert on. And one of the companies I researched is actually Pool Corporation. And I did a lot of research on this company, and I have my own price target to start buying this company, which I like for the long term. This is what I did on my weekend. But the people, some of them that are in my group, they were just talking about the bear porn and who's actually going to fall next. And this is not going to make us money or save us money or do, anything to us. So I would, again, advise investors. So if you're looking for all those narrative, always think, how can I profit from this? Not what's going to happen next. We don't care about what's going to happen next. Can you actually make money from it? Is it priced in the options market or not? If it's not priced in, you could make money, then go and do it before you start, looking for who's going to fall next and GFC 2.0 and Credit Suisse and all that type of stuff. So it's best, again, to chase profits before narratives. You can do that for fun, but always look for ways you can make money. And if you can't make money from it, I'm personally not interested in watching anything around it. All right. Now, the second mistake that I believe people are still making in 2023 is actually buying the latest trend. What I mean by that, I mean by the AI stocks and a lot of the stocks. Now, what did they buy in 2022? They bought the oil stocks. And I made a video in 2022 saying why oil stocks will underperform in 2023, because everyone loved the oil stocks in 2022. Now in 2023, the oil stocks are crashing, but investors are not buying the oil stocks. They are buying the AI stocks because they are going up. This is what I'm trying to talk about. So you have to always look for, what is the latest trend and try to ignore it. What you should be focused on is what are people selling? What are people hating? It's a lot of the pharmaceutical stocks. CVS is going down. Pfizer is going down. Johnson & Johnson is going down. The oil stocks are going down. What is going up? Nvidia. But people are buying Nvidia. Most of them are not looking into the pharmaceutical type of stocks, the defensive stocks, a lot of these type of stocks that people now hate, although they loved them in 2022. And this is what I personally do. I try to buy things that people hate and sell them when they love them. And many people ask me, should we then be buying the EV stocks? Because now no one likes the EV stocks. And I agree. If you find value in the growth stocks or the EV stocks, you should actually be buying them. And I told you guys in 2021 and in 2022 that people loved the growth stocks in 2020, 2021, and now they don't love them anymore. And I told you guys that I'm going to find growth stocks to add to my portfolio. And I actually did buy one growth stock, and it's actually profitable. And I believe the company got fairly valued, and I'm trying to hold it for the long term. Now I might, change my mind and maybe take some profits on this growth company, but this is what I have. I don't chase, narratives. I'm not, a super bear like people believe. I'm just, looking for ways to make money. And I'm willing to do whatever it takes. If it's growth stocks, value stocks, Bitcoin, although I don't own Bitcoin, but if you can give me a conclusion that Bitcoin is going to $1 million, I'm going to buy Bitcoin right now. I don't care about narratives or having the latest trend. I try to buy things that people hate and try to sell them when people love them. And this is how I can, outperform the market and try to, do a little bit better than average, which I did do in 2022 when I made 27%. And I'm doing it now again in 2023. Now, another mistake that investors are still making in 2023, and this is likely going to get me a lot of dislikes on this specific video, and it's actually moral hazard investing. Now, what do I mean by that? I'm going to actually tell you what is my most disliked video of 2023. And it's actually my analysis on Pfizer stock. Why is that? Why it got so many dislikes? All I said in the video is that Pfizer is a better company than what it was pre-COVID. The balance sheet is better. And this is just facts. I'm not making things up. But I got 5 comments under this video of people saying this company should go to prison because they did the COVID vaccine and it's a woke company and all that type of stuff. Now, if this is what you personally believe, it's up to you. I don't care what you believe. You believe what you want. But investing is different from what you believe. And most people just cannot put their emotions aside and look at the business first. It's like, for example, people say, I don't invest in tobacco stocks because, smoking kills people. I can't invest in Lockheed Martin. I'm selling those things because I get them in the comments. I don't invest in companies that, make things to kill other people. I understand. I don't invest in the oil stocks because they're killing the climate. I don't invest in this one. I don't invest in private business. If you can imagine how many good opportunities I would have missed on, like GEO, which went up 100%, CoreCivic, which went up 35% in 2 months in the end of 2022. I would have missed even British American Tobacco. I would have missed so many opportunities if I was just investing for moral hazard. But you have to always keep in mind that this is, you're not running a charity. You're running an investment. You look at the business first. And if you could make money from such investment and then you could give it to your favorite charity, I don't think this is something bad. But people put all kind of rules on themselves that they don't invest because something is bad. It's like if they can control it. Like if they don't invest in it, it's gonna just get delisted or whatever, which is actually not true. Now, if you have something personal, and let's assume one of your relatives actually passed away from, smoking, this is very unfortunate, and I understand why you might have a stand on a specific company, but people only want to invest in companies that are gonna fix the planet, are gonna, do things and then help people, all that type of stuff. This is what you could do in your free time. But investing is different from actually your own emotion. It's not a charity, it's business. You have to look at the business first, you analyze the business, then you could look at other things and see if it actually makes sense. If it makes business sense, you invest in it. You don't just rule things out because of some type of a narrative. This is what I don't like to do. But many people do it. And again, it's up to you guys. You could do what you want. I, respect that. I don't mind. But I believe a lot of you are actually missing on a lot of opportunities just because you have these rules on yourself that you don't invest in a company because they do whatever. I don't invest in Disney because they are a woke company or whatever. If that's what you believe, it's fine. But look at Disney's business itself. Does it make sense? Is it undervalued? Then you could make your own decision, but don't just skip it because it's something you believe in. This is what I'm trying to say. And this is something that people are still making in 2023. And I would really hope that it actually stops and people start looking at the business instead of just looking for their own emotional beliefs, which they should have no relations to what you are actually investing into. Again, that's just my personal opinion. The last one, and I believe this is again a big mistake that people are making, is they are not using options. Why don't they use options? Because options are risky. Because Wall Street bets used options, that means option is just gambling, which is somewhat true, but it's actually not true. Many successful people I know, they use options and they make a lot of gains. And I personally use a lot of options. I would have never been up 27% in 2022 if I actually didn't use option. But I'm actually going to debunk this whole case that options are risky, because this is what people say. Don't touch options. Why? Because options are risky. Well, people that tell you that actually don't have any strategy for them to use, and they likely put their life savings in options and they lost 100%. So they just claim options are risky. But I believe options are actually not as risky as you believe. And I'm going to tell you exactly why. If you look at this first graph, this is called pain and gain. This is going long, buying an option. When you buy an option, let's assume you put $100 for this contract, $100, all right? The maximum you can lose is $100. Your pain is limited, but your gain is unlimited. This $100 could go to $1,000, $5,000, $10,000, $100,000. It could go infinity. Your gains are infinity, but you can only lose $100. Now tell me how this is something that's risky. But this is again another narrative that people believe that, oh, options are risky, you shouldn't touch them because Wall Street bets blew their account. Well, because they're idiots, because they put all their money into those options. What I do, I put in 1% of my portfolio, 0.5% of my portfolio in this option. Options are meant to have an asymmetrical bet where your loss is limited, but your upside is unlimited. But what people do is they go 10% of their portfolio into a call option. Well, you're risking 10%. This is gambling. But if you're putting something small and you're keeping options the way they should be, which is limited downside, unlimited upside, options are not as risky as you believe. And I do personally use a lot of options, like on, a lot of other stocks that I do and many other things. Some people like to sell options, which you could actually do if you like a stock for the long term. You could sell a put on it. You could do, many other things, and then you could get paid a premium to own this stock. You could actually do a lot of other, spreads and many other type of option strategies. But I believe options are extremely, extremely useful, and they are not as risky as you actually believe. Now, I'm not giving you financial advice, and I'm not recommending you using options. I believe beginner investors should not be using options. You should be learning about how to value stocks and all the basics. At your second or third year, this is when on my third year I actually started, doing options, and then I lost a lot of money, and then over the years I developed a strategy that I actually implement and really helps me, have pretty consistent gains with options. But I do take some losses, from time to time. But I believe options are something very important, and if you have more than 3 years of experience, I would highly encourage you at least just look and see, how options work, and if you could maybe sell puts or do something that could actually, amplify your returns in your portfolio. So those are 4 mistakes that investors are still making in 2023. I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.